I get the issue of fairness, especially on places that haven't been fair to us on trade, Peter. Question is, though, if it's going to have a damaging effect on business confidence, business spending, business planning, because that they've been doing business this way for a long time, and now there's great uncertainty about higher costs potentially of imports that they would have to pay, changing their cost structure, and also potential more reciprocal or retaliatory tariffs once we do this.
I think you have to step back and look at the broader structural readjustment we're having with the whole global environment here. The birth of the external revenue service is going to take us back to a future that looked a lot like McKinley and Jefferson and Hamilton, where this country prior to 1913 relied almost exclusively on tariff revenues, and we prospered and our nation was secure. And what the President Donald John Trump wants to do is get to that kind of world, and it's going to be a great world. If you look just micro at what happened this week in the steel and aluminum tariffs, we've seen billions of dollars added to the market cap of companies collectively: Nucor, Cleveland Cliffs, U.S. Steel, Century Aluminum. And we expect not only those companies to prosper as they did back in the first term, but we're also going to see a lot of investment come, both domestically and from abroad, to come inside the perimeter of the United States to be able to produce. So this is
the steel companies may have rallied, Peter, but the auto companies are warning about it, and they are not rallying. And this could be a huge headache and a huge expense for them. Not to mention other companies. I mean, we were talking to Coke yesterday. Aluminum costs are going to go up. Cans are going to go up. I mean, there are others affected by these.
Sir, here's the beauty of this. If I were sitting here as I did back in 2018, you would say the same things based on the things that those industries were saying. The problem they have, and now I can share with you, is none of that happened. We didn't have inflation. We didn't have any problem. Everybody prospered in the Trump economy. And so crying the inflation wolf this time around, and I can walk you through the reasons why we don't observe inflation when we have tariffs, despite the seeming logic of it. And the first thing that happens when we put a tariff on is that these export-dependent economies, the producers, lower their prices significantly, so they don't lose market share. The next thing that happens is a currency adjustment. The governments do manipulation and adjust because we have a lower trade deficit. Supply chains adjust, and then as we get more investment in the industries, we get higher productivity, real wages go up. And I remind you here that one of the proudest things I think that we have for the first term was real wages. Real inflation-adjusted wages went up significantly in the Trump term and down significantly in the Biden term. So this whole inflation thing, I mean, CPI comes out today. I mean, this dog bites man. It's Joe Biden bites the American people. It's a combination of a mismanagement of our supply chains by Biden and dramatic overspending. I mean, it's like Rick Santelli's worst nightmare to watch Joe Biden for 4 years add trillions and trillions and trillions to the deficit. And look, help's on the way. We're going to have drill, baby, drill. That's going to take care of a lot of what happened today in the CPI with things like fuel oil costs. We're going to have deregulation, the plus being the DOGE effort, and that's a positive supply shock. So that's going to come on down. We're going to have a lot of investment here. Tax cuts, which are going to be paid for in large part by the tariff revenues. And folks, this is the time to be bullish in the Trump economy. I know the day traders are having a little fun today, but the future looks bright. What do they say? I need shades, right?
Peter, how do all these things fit together? If the tariffs are not inflationary because they're absorbed by the exporters in the currency and it kind of comes out in the wash, that doesn't create an incentive for domestic production because there's no price signal effect. There's no opportunity for market share. And then on the other hand, if you're relying on a across-the-board tariff on last year $3.3 trillion in goods imports, I mean, to even become a material bit of revenue for the federal government, you're going to have to keep that level of imports up and put tariffs across the board, and there's going to be no demand impact on it. I mean, not everything can actually come out favorably from imposing tariffs on the revenue side, on the inflation side, and on the domestic production side.
Yeah, Mike, I've always loved the way you think, going back to the columns you used to write and everything. It's like the macro way of everything fits together. So let's like talk about how some of these adjustments are going to take place. I mean, again, history's on my side on this. During the first term, our objective was to get the capacity utilization rates in the steel and aluminum industry up to 80%, which is above that threshold. That's where you have profitability and investment. Right down now, and we got there. But then Biden came along, gave up all these country exemptions, product exclusions, didn't let the Customs and Border Protection look at things, and they slid back to near 70% in steel. It's astonishing, Mike. It's 52% in aluminum. And meanwhile, Australia's at 90% capacity utilization, dumping stuff in. What this policy does, Mike, is protect these industries from dumping. The bigger problem in steel and aluminum, massive global overcapacity propagated by massive government subsidies and predictable dumping. And so what the steel and aluminum tariffs do, it's not just that we have the tariffs at 25%, raising aluminum from 10 to 25. It's that we eliminate all country exemptions, eliminate all product exclusions, and importantly, this wasn't noticed very much, we expand significantly the amount of downstream products that are covered because, as you know, what countries do when you put tariffs on slab is then they turn some slab into something else and they send it over here and they're non-tariffs. But I'll tell you, I mean, Brazil's dumping slab at the low end. Japan's dumping high value-added stuff at the high end. China's
Peter, you're focused on
Mexico
the micro here on these couple of import categories. I get it. You know, we kind of worked it, most of the tariffs, but we're not talking about across the board. You know, first of all, trying to counter European value-added taxes, which kind of aren't really a tariff, with tariffs of our own. It just feels as if you can understand why businesses are like, it seems like the rules are moving around and we're not really sure how this actually plays to our benefit down. I mean, are we going to be making T-shirts and towels in North Carolina again? What's the ultimate goal here in terms of reworking our own economy?
Well, okay, the ultimate goal is rising real wages for blue-collar Americans, a thriving middle class. We have a strong defense industrial base and manufacturing base for our economic security and our national security. And when we are in times of crisis, Mike, we aren't dangerously vulnerable to foreign nations for medicines or metals or anything in between. And the $1 trillion trade deficit, this is a big thing with President Donald John Trump. We run a $1 trillion trade deficit every year. As Warren Buffett, of all folks, has pointed out correctly, that's a transfer of assets to foreigners of $1 trillion every year that turns into purchases of land and things like that. We got to stop draining that problem. And so the end state is a much more robust and secure American economy, Peter? And I think a better world, because these imbalances aren't good for anybody.
Peter, on the better world thing, I mean, Mitch McConnell has an op-ed out today sort of warning about the isolationism and how we have to protect American interests and tighten our friendships and be a reliable partner. Do you think about the broader implications here of the geopolitical sphere at a time where we need our allies, imposing tariffs, surprise tariffs, getting them all upset about this, having them it makes us an unreliable partner. Do you worry about that?
Not at all. Not when I hear it from Mitch McConnell. I mean, come on. Mitch McConnell, Paul Ryan, the Wall Street Journal. These are the folks for the last 30 years that have encouraged our jobs to move offshore and our open borders to welcome illegal immigrant labor to drive down wages for the benefit of a small portion of America. And all that has done, following the Pied Piper of the Mitch McConnells of this world, is decimate our economy and export our factories and jobs.
No, but there's security issues to be aware of, too.
It's time for Mitch to
I think he channels something other investors
gently into
think.
this good night because he, of all people, has been responsible for a lot of delays in up on the Hill in terms of getting good policies done. So I'm not Mitch. Mitch doesn't have a lot of credibility. He should look at some of the metals industries and energy industries in the state of Kentucky that are going to boom from President Donald John Trump.
Peter Navarro, thank you very much for coming on to talk
Great
through
to
the
with
motivation here. Good to talk to you from the White House.